Hi, my name is Gabriel from Kodaira Securities, and in this presentation, we will go over what a share, stock, or equity is, the different types of shares, and how an investor can use a better understanding of what shares are to succeed in investing. As always, all information given in this presentation is general in nature and does not take into account your personal needs or objectives. For further information, please visit our website www.cosec.com.au. Today, we will go over what a share is and its function, what the implications of share ownership are, and the benefits of holding shares. We will also go over different types of shares and the characteristics of them. The first issued shares were by the Dutch East India Company on the Amsterdam Stock Exchange in the early 17th century. A share is essentially a piece of a company which gives the shareholder ownership of a business proportionate to the number of shares held. Therefore, the more shares of a company held, the higher portion of ownership is actualized. Oftentimes, shareholders will receive dividends for each share held, particularly in well-established companies. However, not all companies pay dividends to owners of its shares, as dividend payments are at the discretion of the business. Companies sell stocks in order to raise capital to fund operations, expansion, as well as offset costs and finance upcoming debt maturities. Shares are bought through exchanges such as the Australian Securities Exchange and through stockbrokers who are licensed to buy and sell on the exchange. Shares are also purchasable directly from a company in a share issuance or initial public offering. Purchases made directly from companies exist in what is known as the primary market, whereas from other shareholders on an exchange is known as the secondary market. As a shareholder, the value of your shares will fluctuate with the share price. So for instance, if you bought 1,000 shares of a company at $20 per share, a total cost of $20,000, and 6 months later, the value of each share is $30, you would have $30,000 worth of the company's shares, even though the number of shares you hold is unchanged. This represents a capital gain of $10,000. Shares have historically been the best performing asset class, outstripping real estate as well as investment banks. This makes investing into shares a particularly attractive enterprise, and as such, knowing more about what a share is and its place in investing will solidify an investor's understanding and thereby minimize their risk. So you can see on this pie chart a representation of share ownership. The more shares an individual holds, the more of the company they own, and consequently they are more able to influence the direction of the company. So as you can see, John Doe owns the most shares in this company, where Steve Smith, Andrew Forrest, and Warren Buffett all own more or less the same amount. This means that their stake in the business is less than John Doe's, and thus they're not able to influence the company's operations unilaterally as well as John can. This is because they control less of the company. There are two forms of shares, common and preferred. Common shares provide owners with voting rights within the company and allows for holders to purchase new shares and maintain their relative ownership of the company when a business issues new securities. Preferred shares have a different set of characteristics. Namely, they provide owners with set scheduled dividend payments, and holders of preferred stocks get the first payment if a business goes into bankruptcy and pays back its debtors. Whereas holders of common shares receive payment after holders of preferred shares. However, companies with preferred stocks tend to be more stable, and thus it is somewhat more difficult to realize strong capital gains. There are several terms needed to fully understand shares and the variance therein. The total number of shares of a particular company is known as outstanding shares, and this is used to calculate market capitalization. Market capitalization is calculated by multiplying the outstanding shares by the share price on any given day. So for example, if a company has 1 million shares on the stock market and each share is worth $50, the market capitalization is calculated by multiplying 50 by 1 million. This makes the market capitalization of the company $50 million. Naturally, as the share price fluctuates on any given day, this number will change accordingly. As the market capitalization of a company changes, they will move up and down on the index, changing its position within the exchange. Outstanding shares differ from authorized shares in that the latter is the total number of shares a company may issue, not all the shares in circulation. Naturally, the number of authorized shares can be changed dependent on the growth goals of a company as well as through shareholder voting. It is important to understand the difference between the two, particularly when making calculations as to the overall fundamental strength of companies, as incorrectly employing one or the other in isolation may facilitate inaccurate readings. Issued shares are securities which are offered to shareholders and counted in overall ownership of a company and consequently voting rights within the company. The process of issuing new shares is known as issuance, and companies will release statements on the Australian Securities Exchange outlining the details of a proposed issuance. Naturally, when a company undertakes a share issuance, it dilutes the ownership pool, allowing investors to purchase more of a stock to maintain percentage ownership. Holding shares is one of the best ways to realize a capital gain. As opposed to investing into bonds, exchange traded funds, real estate, and savings accounts, which offer significantly lower yields, the stock market is an incredible channel for securing wealth. By better informing yourself, you minimize your risk and help protect your capital.
So in this presentation, we went over the fundamentals of a share and the nuances of them. I hope you have found this informative. This video has been brought to you by CoSec, Kadari Securities. Thank you and have a nice day.